Hello everyone and welcome back to Option Alpha in this video tutorial for the triple bottoms chart pattern. So as always, we'll get right into it here. So the chart pattern for a triple bottom, well, it sounds exactly like it says. It's a triple bottom. It's 3 consecutive bottoms formed on a chart pattern. The most important part of this huge bottoming chart pattern is that it has to be at the end of a downtrend. Now that's a little bit different than some of the other patterns that usually are in the middle of an established trend, like a triangle or a flag. Those already have to be in the middle of an established trend. But with the triple bottom, you already have to have a downtrend before it, and that's the big important part. This can't form at the top of a trend, it can't form in the middle of a trend, it has to form at the bottom of a huge, long sustained downtrend. And just like this chart shows to the left, the downtrend goes into the first, second, and third consecutive bottoms. Now as the chart is bottoming, and these bottoms have to be fairly close together, there's some wiggle room, but for all intents and purposes, they should be fairly close together, all 3 of them. The 2 consecutive tops or peaks between each bottom, the first and the second and third, should also be relatively close together. And that forms our breakout resistance level on the upside. So once the first bottoms come in and the second, now we have an area that we can call kind of the neckline, as usually it's called on a head and shoulders pattern. But this upward breakout resistance level. And that's what we're going to look for as the third bottom gets put in, that this breaks cleanly out of this area. So again, it is important that these 2 resistance levels be fairly close together as the chart pattern is forming. Now, it's important to note at this point that this is a long pattern. This is a huge basing pattern, and we'll see in the next slide that it has really good upside potential. But like I've said here in my notes, this is a 3 to 6 month period for this pattern to really form. So again, crunching the numbers as we always do with these chart patterns, the average rise or decline from a triple bottom or a triple top is pretty massive. It's about a 37% increase after the breakout. Now again, that's really good numbers, and that's why it takes so long to form. It's got to increase the amount of buyers that are willing to come in here and create a solid foundation, solid base from which to rally off of. The breakout failure rate at 4% is actually very low. It's pretty much a 95% chance that once this thing breaks out of a pretty clean pattern, that it's going to continue higher. The reason that the breakout failure rate is so low is because if it's already been in a long sustained downtrend and does have enough energy and enough momentum to muster up some sort of a rally or a base, then the likelihood is it's going to gain a lot of attention and continue higher. The throwback and pullback rate is very high, and I'll tell you why on this particular chart pattern. Think about the psychology of the people who were investing as this thing was bottoming. It's been bottoming and moving back and forth on this long bottoming process to form all 1, 2, and 3 of the bottoms of this triple bottom, that a lot of investors are going to be a little bit leery that this thing is actually ready for a new bull market. So usually what happens on the breakout is that we do have a pullback on that breakout, so we'll break out higher and then pull back and retest that old area of resistance that's going to now act as support. That's really good for traders as well, because we can wait to see the breakout and then try to catch the trade on the pullback and get better pricing. So some keys to remember with this chart pattern: again, a clear downward trend should precede the formation of the triple bottom. We don't want this to happen in the middle of a trend. It has to be at the end of a long sustained downtrend. Increasing volume on the advance and rise of the third bottom generally reinforces the soundness of the pattern and the willingness of new buyers to step in. So if we see increasing volume on the third bottom and even increasing volume on the second bottom, it means that people are more confident to invest as it gets to lower prices. Every time it gets down there, more and more people jump in. Eventually it's going to break out. Obviously, the longer the pattern develops, the more significant the ultimate breakout. Patterns that are 3 or 4 weeks are not going to have as big of a move as patterns that have been basing for 3 to 6 months. 3 to 6 month type patterns have many more buyers that have committed money to it and generally see a bigger average rise or decline. Hey, thanks for watching this video from Option Alpha. As always, we invite you guys to come back and check us out at optionalpha.com. And if you like this video, please share the video with any of your friends, family, or colleagues on your favorite social network.